In this video, I'm going to cover your Chapter 9 regular homework question number 3. This question asks you to calculate the activity variances. So you really are comparing the planned amount to the flexible budgeted updated amount, but there's a shortcut. The planned amount is always based on the estimated or expected number of units. The flexible is based on actual units. Now we could recreate the entire planning budget by taking the expected number of cars and multiplying by $6 to generate the total revenue, and then taking the actual cars and multiplying by $6 to generate the total revenue on the flexible budget. Subtract those two amounts to find the total difference in your activity variance. Or we can just find the difference in the units, which is 100 cars, 8,100 compared to 8,200 cars, and multiply by the $6 revenue amount. So I will have $600 in revenue activity variance. This would be favorable because I have more activity and generated more actual revenue. The next part of the activity variance analyzes the expenses or the cost. When you have more cost, more cars to wash, you will generate more cost. So all of those variances will be unfavorable unless they are dealing with just a fixed cost. Then it would be unchanged and neither favorable nor unfavorable. But when the activity increases, the activity variances on the expenses are all unfavorable because you would be generating more actual cost than what you planned. The difference here is 100 cars getting multiplied by that variable component of 50 cents per car would give me a $50 cleaning supply unfavorable variance. The next line, a difference of 100 cars multiplied by this variable component of 9 cents. I don't need to factor in this fixed component on the activity variance because fixed costs don't change with activity. So this would be a $9 variance unfavorable because 100 cars multiplied by 9 cents. The next line, again, we're still dealing with the 100 car difference times 20 cents per car. So a $20 unfavorable maintenance activity variance. The next line, 100 cars of extra cost and 30 cents per car for wages and salary would be $30 unfavorable. The next two items are fixed. So my activity doesn't affect this. If I were to calculate the total cost on the flexible budget for depreciation, it would still be 8,100 and it would reflect a 0 activity variance. The planned budget and the flexible budget won't change for the fixed cost. So those depreciation and rent items would be a 0 variance, and on the drop down it will give you an option for none. Rent, 0 activity variance, none, unfavorable or unfavorable. And then the last expense says it's a $4 per unit cost. I would actually have 4 cents per unit cost times 100 cars. 4 cents per car times 100 gives me a $4 unfavorable item. So you're going to add up all of the expenses here. I have 50, 9, 20, 30, 113, all unfavorable. If one of them was favorable, it would have to be a subtraction item. So you can't add favorables and unfavorable. They have the opposite mathematical sign. So I could add all of these because they were all unfavorable. To come up with my net operating difference, I'm going to take the 600 minus the 113. So 487 favorable because the favorable was bigger than the unfavorable. My revenue that I plan to generate with more activity is greater. The $600 is greater than the increase in expenses I will have. I'm going to check my work. All green check marks. Let me know if you have questions.